The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 9th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, no problem. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 305 points, 24,761 is the print. The S&P is up 21 points, 2781. NASDAQ 100 up 40 points, 7246. Russell's up about 8, 1701. Semis are flat, totally flat, trading out at 1349. The transports are up 189 points. That's nearly 2%, printing out at 10,663. Spot volatility index down at 1273. Gold up 3.5 bucks. Silver up 10 pennies. Light sweet crude up 18 cents. Lead the charge here to the upside. You've got Amazon up 14 bucks, less than 1%. Helen of Troy 15 to 16, actually 15.84%, 16 bucks the upside. Chipotle up 2% or 9 bucks and change. BlackRock up 9 bucks. That's nearly 2%. To the downside, it's Biogen, BIIB, down 7 bucks or 2%. You've got Mercado Libre, 444, and 51 Job Inc., JOBS, not Steve Jobs, but JOBS, down 431, $4.31. That's about 4% out there. Of course, I want to take a look at what you want to look at. No questions yet. All right, so what is it that Stevie's really looking at out here? What I'm looking at, what I'm trying to understand, the question I'm trying to answer is, what's the NQ been doing since last night at 11 p.m.? And as I like to teach folks sometimes to say, if I ask the question, what's going on or something like that, or what do you think about that? Sometimes you can just answer, not much. And that is exactly what has been going on inside the NQ since 11 o'clock last night. Let's take a look at this chart out here. If we take a look, this is a 5-hour chart, so we can see that in essence for the last 12 hours approximately. Let me just take this little rectangular box. Here's 11 o'clock. My cursor basically right at the close of 11 p.m., 2300 hours. You can see basically the NQ, yes, it's had some intercession swings to the upside, to the downside, but very small-bodied candles. They actually don't qualify as a doji, doesn't actually qualify as a high wave candle, doesn't matter. What we do know, now you expect or anticipate small bodied candles in the wee early hours out there. That's not uncommon. But, as we came into 9 o'clock with the markets the way they've traded overseas last night, and just take a look at our session here, the 9 a.m. session. That's the bar that we're currently in, which ends at 2 p.m. What we can see is that the prior bar, or the prior time frames bar, high and low have been exceeded. You've got a bearish candle spotty at this stage, but there's still 50 minutes to go in this session. What does it mean? Let me tell you what I think that it means, because typically when you see small-bodied candles, it tells you that the market is tired. And I think that's really what is communicating to you and I. Now, what we don't know is how is the market, how is the NQ specifically going to take a rest? The reason why trying to find the correct vernacular here. Here's what I think is going to occur out here. And it's not that uncommon. If you take a look at Stevie's red line, remember we've now changed that to a green and red line. Green means that the price oscillator, difference between two exponential moving averages, in our case, 19 and 39, is above zero. It's important to understand whether that price oscillator is above zero or below zero, and this price is above Stevie's red / green line now or below it. You can see price is clearly above Stevie's green / red line. But right here at the trading session of 2 o'clock, this takes us back to 2 o'clock on Friday, big wide ranging bar. And as that bar was forming, you'll see that the Stevie's red line turned to green. Now, what that tells us is that the price oscillator moved above zero. Now, the common pattern doesn't tell us when, just tells us that it's going to occur. The common pattern is that Stevie's red / green line out there, blended line, and price will catch up to each other. What we don't know before it really makes its next move, what we don't know is whether price is going to pull back, Stevie's line is going to move higher, a combination of the two. But that, in essence, is what appears to be unfolding now, not uncommon. Now, here's the deal. You're trading at 72.54 in the NQ. Our line is at 71.93. So you're looking at about a potential 62 point move to the downside. Maybe it's somewhere in between 0 and 62, because the market could just, or the NQ could continue trading sideways, waiting for Stevie's line to catch up to it. We don't have that same pattern, in essence, that is unfolding inside of the other equity markets. However, the Dow has had a spectacular day. It's up 300 points, up 1 and 2/10% basically. And if we take a look at the 5-hour time frame chart for the Dow, what we're going to see is right here last night at 11 o'clock, that is when Stevie's red line turned to green. So what does that mean? Even with the strength in the move out here inside of the Dow, it also, this is the YM that we're taking a look at, is suggesting to you and I that we should also see price and Stevie's line catch up to each other. Doesn't tell us when or where. It may just be simply a pullback to about the 24,531 level or 24,451 on Stevie's line out there. But and that's the top of the box. So that would be a pretty significant pullback in the markets. Is it going to unfold? I don't know. I do know that the majority of the time, here you can take a look at the Dow Equity Futures contract. Again, a 5-hour time frame chart. Takes us back to 4 o'clock in the morning, back on June 18th. You can see the line turning from green to red. What do you anticipate? You anticipate that price and Stevie's red line is going to catch up to each other. That took place at 2300 on June 18th. Maybe just the reverse. I don't know. But we know that that is what typically unfolds out there, and how that test occurs tells you a lot about the market. So if I were to ask you, hey, what's going on out there? You'd say not much when it comes to the NQ. But the hair on the back of your neck should be standing right now, because we're about to go to a break. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow up 280, S&P 18 points. Let's go to our first question. Coming in from Mike R. And Mike says, always enjoy your show. I enjoy the fact that you listen to it, Mike. Thanks so much. Do you see Netflix and Facebook continuing to move up into their earnings state of July 16th and July 20th, respectively, currently long in short-term long holdings and have already taken partial profits out there. So let's just do a quick analyzation of let's start off by taking a look at which one. Let's look at Facebook first out here, and we'll look at it on 3 different time frames. Asking me whether something's going to move up for days, that's always a more difficult question. But what we can do is let's just go take a look at the structure that's in place, what it's communicating to you, what you should be watching for out here. So we'll just start with the daily time frame chart for Facebook. Now we have the daily, the weekly, the monthly time frame chart out here. Left is daily, center is weekly, right is the monthly. And what we do here with this set of charts, we just take a look at the TAS market profiles because these provide us with levels of support or resistance. What the heck does that mean? Well, in the case here for Mike R., who wants to understand, is Netflix, or in this case here, Facebook, both, are they going to move higher? What you like to see is price trading above the top of a box. Each of these boxes have 3 lines. They're all in light blue out here. And each of them are different time frames. What we can see is that price is above the top of each of those boxes. That is the same thing as driving down the expressway, coming to an area where there's always traffic. As soon as you get past that traffic, you floor it. Well, in this case here, what Facebook is doing is flooring it. So we have to look and see if there's any other signals out there or warning signs with regard to Facebook. From a daily perspective, Mike, what you like to see, you don't have to see it. What you like to see is you like to see price break above a prior swing point. In this case here, we'll go measure that. We'll use a yellow line because we just simply like colors out here. Well, let's put it across. And that's the high of the trading day of June 20th. That is 203.55. You're trading at 203.63. Now, the volume on that day, which would set up an A to B equals CD to the upside, which is what you'd like to see, or in essence, we would say it would confirm an A to B equals CD, had 28 million shares. There ain't no way it's going to happen today because well, I guess it could. You're at about 12 million shares. Doesn't seem likely. If you were to get more than 28 million shares, if you were to close above 203.55, then you'd at least have a small A to B equals CD. What does that look like? I'm using the conservative one by using the low of June 8th. The high out here on the day we were just looking at, June 20th, the retracement down into the bottom of that task market profile in July 2nd. That would say 209.34 to 214. You are at 203.67. You know, is that $6? You've got to. So that's now light volume. It appears as we speak right now. What happens if it closes below 203.55? Just like I shared with you earlier, probably not much. The level you would really be watching for in Facebook in your position is this going to pull back below Stevie's red line? Because support out here, and you'll see it's a green line. So you know you have a rising price oscillator above zero, 201.54. As long as price stays above that, it says really you should stick with your position. It's no guarantee, but it is. But hey, you're traded above a prior swing. Volume not too bad out there. You're trading above Stevie's green line out here. Again, I don't see in the case of Facebook any reason for you to close out that position. Let's go see what Netflix is doing, NFLX. Let's do the same kind of thing, only let's do it in reverse order. And by reverse order, we'll just take a look at Stevie's Ninja Trader work page out here, a chart. And you'll see that our green/red line, it's green, price oscillator is above zero, 410.40. You're trading at 413 and change out there. Preferably, you'd like to see price stay above 410.40. Let's come take a look at our market profile data, see if there's any important information out here. And we'll look at the daily, the weekly. So the weekly has a brand new box out here. And we're in the case of the daily and the monthly, you're up above profiles. Now, out of curiosity, just as we take a look at Netflix out here, looking that it's trading into the day of its swing point high, June 21st. There were 18 million shares traded. Does not look so. You're trading in there with light volume. And when you start to ask me, hey, will this trade higher into the July 18th or 20th type time frame? Right now, there's no reason to take the trade off. You're trading, even though you're moving into a swing point with light volume, as long as it closes above 406.37. What was Stevie's red line? Mine was 410.41. So those are going to be your two areas to be paying attention to. As long as price trades above 406.37 is what I would say. Says you can go test the top of that swing point. You haven't done that. The top of the swing point is 406.30. The heck am I reading? Is 423.21. Little dyslexic at times. 423.21. You trade in there with volume, says you're going to go test it. Is it a guarantee? No guarantee, but pretty good odds. When you're in there with light volume, the odds get reduced substantially. But as long as you're in there, hey, I might as well go test it, see if I can clear that hurdle for 23.21. If price were to close over that, do it with more than 18 million shares, then you would also have an A to B equals CD to the upside. Now, on a weekly basis, here's something to pay attention to because this week ends when? July the I guess I just have to add, what are we looking at? July 13th out here? Is it Friday the 13th or is it the 14th? Doesn't really matter. You and I, we're not superstitious out here, but we are concerned about when price closes below a brand new profile. Right now, the top of the weekly box, bullish structure in nature. So it's bullish as long as it stays above 413.13. It's only about 23 cents from where we're trading right now. Nonetheless, those are an important 23 cents out there. You stay above that, says, okay, go ahead and stay long. What happens if it closes this week, and it's only Monday, below 413.13? Says a pretty good chance that price will pull back to 382.90, to 372.82. Doesn't say it'll do it this week. Just says that is where price would likely head to inside of Netflix. So I hope that that helps you out. I'm glad you enjoyed the show. Thanks for writing in. Much appreciated. That was Netflix as well as Facebook. We've got a question here from Earl, and the question is IBB headed back to its January high? Well, I don't know, but let's go take a look at the IBB. That's a NASDAQ biotech sector out here. And let's go see where is the January high. Let's also see if Steve-O can actually type in 3 letters. That's all he needs to do is type in 3 letters. Okay, we've got him typed in. So you're asking, we'll get back to the January high. Again, just from a simplistic standpoint, there's nothing simple about it, but just take a look at price in relationship to its TAS market profiles, daily, weekly, and monthly. You're above all tops of the boxes. So that's good. Says there could be, should be a breakout underway. Friday, there was some really nice action inside the IBB because of Biogen, BIIB, and maybe a number of other stocks out here. Here's what we know about the January high. Let's go take a look. Let's go mark it. Let's go mark the bottom, which is 117.85. We haven't gotten up there. It hasn't gotten up there. It was 2.5 million shares out there. Earl, and his price was moving up last week, was 4 million shares. Didn't get in there, but it was pushing higher with volume. Today, 1.8 million shares, still has volume moving higher. So I would say, technically, volume-wise, looks like this wants to go higher. When we come back, we'll finish taking a look at the IBB and anything that you'd like as well. Steve at TFNN.com, or give us a call, 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 282, S&P's up 19. And during that break, I saw that somebody threw a hanky on the sidelines there. I think that's the universal signal for instant replay. And so we did an instant replay and took a look at the IBB out here for Earl. And one of the things that that instant replay showed us is, you know, there is a gap to the downside that occurred on January 30th. That's at the 117.48 level out there. And in order for the IBB, so it's going to likely get into that January level, but this could be resistance, 117.48 out there. So I would watch that. The other thing why that may be important is that price is moving higher, doing less relative energy out here. That is a signal of a potential top, not that one has formed just yet. We don't have that in place as we speak right now. So just be careful with regard to the IBB, where you're at from a profit standpoint, and ask yourself in your time period whether it is worth the risk out there to grab a few extra shekels. So thanks for writing in. Tyrone H writes in and asks if the Great British Pound US dollar falling knife or good entry point. The pound had a big bit of a drop this morning. I want to place a trade on the long side, but I'm not sure how long it can go. Would you be able to look at it? We are going to go look at it. Let me try to get this up, and we'll look at it a couple different ways as well to the best that we can. So just give me a moment to load the pound out here. Now, what I'm thinking is just taking a look at, even though this will be the continuous contract, the actual futures contract, the reason why I'm looking at doing that is because then I won't have a delay. Let me come back here, and if we take a look, you see that right now on my delayed 15-minute delay, it's at 132. 130 to be exact, 1.3216. If I look at the futures contract, it's at 1.3260 out here. So let's do this. Let me pull the futures. Well, give me one more second. Let me just check one other thing out before we go ahead and we get into answering this question. Give me a second. Let me see. 1, 3, 1, 2. Yeah. I'll go ahead because I think because you're asking should you get in, or in essence the question would be when would you get in. So I'm just going to go ahead and pull up the currency pair. I'm not sure what you're trading, but let's go take a look at it. So here's what we know, and if you take this is the daily time frame chart, and so as we take a look at the daily time frame, you can see, you know, big old bearish engulfing candle. In this case here, you know, we take a look at candlesticks. Look, they're important, you know, because it's the way that bulls and bears tell a story. But if you really want to use them, you really want to understand how to use them, want to use them to your advantage, you have to use them as part of your pattern recognition trading program, whatever that might be. Using candlesticks on your own will get your you-know-what, we'll just call it a fanny, handed to you. But if you combine them with other patterns that are out there, well, then you can hand somebody else the other side of the trade their fanny out here. So today's a bearish engulfing candle. Does it have a lot of meaning? It has some meaning. A lot of meaning? No, not necessarily. But as we just simply take a look at price action, Stevie's red/green line, what you and I know, Tyrone, is that the price oscillator is below zero. More likely than not, if you're looking to take a trade on this, I would be looking at that red line. 1.3145 as we speak right now. What you don't want to see is price close below that. We can see since the trading session, we had a nice little bullish engulfing candle. If we do wave counts and things like that, we can do that. We can see where in the heck we are at out here. I would probably come back after that. Looks like this probably, yep. So I'm going to start here too. Just want to see where we may be at. Yeah, so funny how that works, right? So after the fourth wave, which happened to be where I started to count to the downside, you did get to wave number 7. That was on June 28th. Night pattern, right? So there's several different patterns you and I like to take a look at. One of those is that 7th wave, that 7th inning stretch. Well, we can see that the low that was formed out here, which would suggest a potential change in trend, was on June 28th. You got the signal for the change in trend with that bullish engulfing to close above Stevie's red line on June 29th. So now we know what Tyrone knows. We know why Tyrone is looking to take a trade in the Great British Pound out here. We can see that price has tested Stevie's red line a couple days after that, held as support. With the pullback that we're seeing here right now, I would say wait for price to get down to that level. That's what the daily time frame chart is suggesting for you and I. If we go take a look at something that's a little bit shorter time frame, the 30-minute chart, give me a moment to just adjust something on the screen here, because we have lost for good reason. Well, shoot, I got to do it a couple of different ways, but give me just a moment here. We change this to minute to win it. Let me change it to 30 minutes so we can get Stevie's red or green line back out here. See what we can see. What is it? What is it? So there's the so-called falling knife that Tyrone is taking a look at. Is there anything out here that suggests that Tyrone should get into a trade? Based on a 30-minute time frame chart, the answer is no, absolutely not. Now, we can see, just on a short-term basis, we can see how Stevie's red line, which was really green, and then it turned to red right here at 11:30 this morning. What this says to Tyrone on a 30-minute basis, that red line number is at 1.3263. It'll change as time goes on. Is we should see price and our red/green line catch up to each other. So you got to be careful here. If you start to see a bounce, you just got to be careful. You want to see, at least on a 30-minute time frame, price go ahead and close above Stevie's red line if you're trying to take some type of early trade on it. So I hope that helps you out with regard to what Stevie sees inside of the Great British Pound, U.S. dollar. I was taking a look at the daily and the weekly. Thanks so much for writing in. Let's see, what else do we have out here? We have no other requests. So what do we want to do? Nothing inside the Tiger's Den. Hey, everybody out there is just sleeping. Or I'm putting everybody to sleep. It is lunchtime, though. What'd you have for lunch? That's really the question out there. Well, while you answer that question, let's go take a look at the gold contract. Bullish or bearish is the question. Bullish or bearish? It's very dangerous right now. Very dangerous. It's trading at 12.59.20. You might not think that's a big deal. Stevie think that's a big deal. Why would it be a big deal? Because for, in essence, the third day in a row, we've seen price try to trade, well, not trade above, close above its daily market profile. Is that a big deal? Well, it's a big deal when that profile is bearish in nature, in structure. Forget about the nature of it. You want to know about the structure of it. And it is a bearish profile box. What the Sam heck do you mean when you say that? What I mean is if we turn off price, because we don't need to know the price, we just need to know the levels, we can see in this case here there are three colored lines out there. Why did Stevie do that? Hey, I just did. The bottom of the box is green. Center line is that kind of bluish cyan. And then the top of the box is the red one. Look where that center line is. So close to the top of the box. It tells you that the snipers are sitting right there. Where is there? 1260.20. Now, closing below 1256.60 could have even more meaning. We're not there just yet. Close above 1260. What's the number actually? What is 1260.20? That's bullish. And a breakout could or should or would ensue. But close below it. And it's got to make you say, something to think about.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go have one of our dinners, or two of our dinners out here with two different things. So one, Bob in Spokane is long soybeans, the November soybean contract out here. So as we take a look at it, I want to provide Bob with the most current data that we have, which is we've got a 60-minute and a 240-minute and a daily and a weekly time frame set of TAS market profiles out here. So the good news, potential good news, is if you take a look at the 60-minute time frame out here, Bob, and what you can see is that, in essence, it's made slightly more than a 0.618 retracement. So that's one thing. Let's do this here. Let's just simply expand the chart on the 60-minute basis. Let's go ahead and pull it back out here so we can see this. And there was a nice breakout that took place at 9:30 on July the 6th. So prices pulling back, and we don't need to know volume. Might be nice to know volume. We don't need to. We just need to take a look at bars, candlesticks, in this case here, wide-ranging bar. Well, as prices pull back, let's go ahead and get rid of the retracement level. When I say get rid of it, let's just simply turn it off out here. Where is it? Where is it? There we go. We turn it off. Now, there we go. Now, as we take a look at the box itself on a 60-minute time frame, you can see that it has a what type of structure out there? Exactly. Has a bullish structure. So what Bob, or anybody that is trading this contract, what they really want to see is price stay above 868.50 out here. And that's what we're trading in essence right now. We're at 869. What happens if you close below the low of a bullish structured box? It's never a good thing. Close below. That's the key. Doesn't mean you during the session can't test it, but it's a 60-minute time frame chart out here. So far, so good. It is held. That's where the buyers are trying to take a long position other than just Bob. If you close below it, what likely occurs is you come all the way back down to the lows. You come down to the breakout. Could be below the low of 9:30 in the morning on July 6th. That low was 856.40 out there. That's what the 60-minute time frame. That just for blanks and giggles, let's just put a 30-minute time frame chart out there. Short term, and short term, that's a bummer, because you're certainly below. So I think you've got to rely. The only thing you've got at your back right now, well, it could be many things, but let me just do this here for you as well. 15-minute time frame. Is there anything good here? Anything juicy? No. So 15-minute looks basically horrible. 30-minute looks basically horrible, and it's a 60-minute right now that you've got to rely upon. But you know what? What's actually helpful about breaking below profiles out here, as you can see, when you break below these levels, key level of support has failed, says you're going down to lower price out there. So it's helpful to take, even though we're looking at some shorter term time frames out here, and Bob may be looking at this from a longer term time frame. Well, if it's from a longer term time frame, then we take a look at the daily chart, and that says, okay, it's a problem, potential problem. Why? Don't know where this contract's going to close today, but right now it's a brand new daily profile. Neutral in structure. Nonetheless, price is trading below the bottom of this box. If I were going to ignore the 60-minute time frame chart, I would say more likely than not, because price is trading below this, price is going to go test that breakout from July 6th all the way down to the lows of 853.20. I could be just simply dead wrong, and I hope that I am. But from a market profile standpoint, that's what it says. So I'd say watching that 60-minute profile is going to be really important, because you're down below a 240-minute box as well. So it's the 60-minute, the 1 hour, that has to be your friend. Now we had another request to go take a look at some market profiles, and that's for the NQ. So let's go do that. Let's see if Stevie can find this out here. Give me a moment. We will. Here's our TAS NQ trading set of profiles. Now here we've got 31, 20, 300. Tell me which profiles you'd like to see out here. Well, let's just start from right to left. If we take a look at the weekly chart, we know that 2 weeks ago, as price was moving lower, we saw price moving lower, a little kibosh out there. What we know is the top of the box, old resistance, was new support, 69, 67, 18. If price were to fall apart for whatever reason, you would expect that 69, 67 would hold the support. Whether it does or not, that's what you would expect. That's where if you were short, you would look to go ahead and take your profits. If we take a look at the daily time frame chart, what we know about Friday is price closed above the top of its box, 71.57. Now, what's it doing? It's trading into its all-time high. It's trading into that session, the low of which is 72.26. The high is 73.58. When you trade inside a swing point, volume or not, says, hey, I'm going to go test the top of that. That's what the daily time frame is suggesting to you and I. We covered the 5-hour chart earlier. Again, this is showing us that we haven't had much in the way of price movement on a closing basis for 12 hours or so. Again, when we looked at that, in essence, that is this chart right here. You can see it a little bit easier. If we look at the candle charts versus the bar charts, you'll see no movement. What does that mean? It means that the market is tired. Between the price oscillator getting just above zero, where Stevie's red/green line is at, we're anticipating that we're not going to see a lot of action out of the NQ. Could be action to the downside to test Stevie's red/green line. Could be no action and the line moving higher out there. That's what the 5-hour time frame chart is suggesting to you and I. On a 30-minute basis, price is just moving sideways in between 72.52, 72.73. Not really telling us a whole lot there, other than just a bit of a consolidation. And there, my friends, is the NQ. Now, how about for Michael P., who I know is long, or was long, the Dow, anticipating that the Dow was going to go ahead and catch up to the market out here, and boy, was Michael correct on that call. Let's put this on those same time frames, can we? Let's take a look at a 30-minute time frame out here, Michael. In 30-minute, what you're looking for, if you were long the diamonds and you were a short-term trader, you're looking for the Dow Equity Futures contract to close about 24,763. The 30-minute profile happens to be a bearish structured profile. So you've got sellers out here at the 24,763 level, between where we're priced at 24,723 and 24,763. So what have you got? A 40-point range inside the Dow. You close below 24,770, you start moving below 24,723. Does that mean close your position? Not necessarily. What it says is price would head down to the bottom of that box, 24,644. The heck with the 30-minute time frame. What's a 2-hour time frame look like? Looks beautiful. Price is above its TAS market profile high. 5-hour chart above the top of its box. Daily profile now. This is important. Where is the Dow Equity Futures contract going to close today at the end of its session? Well, Right now, it's trading just slightly above the top of its box. The number, Michael, that I would really be focused on is that 24,682 level. Because just like we looked at inside of gold, although this is not a bearish structured box out there, you close below a level of resistance hidden, except for you and I here at TFNN, that doesn't bode well necessarily. In other words, price would have hit resistance, and it hasn't broken out. It's got the opportunity. What happens if price closes above 24,682? Says enjoy the ride, because the ride could take you up to the top of its weekly profile. And that number is 25,345. And that is your Dow equity futures contract. So that was a threefer. You got the Dow, you got the NASDAQ, and you got the soybean contract for November. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a couple of questions here in the 2-minute drill. Chris wants to take a look at XLF. When we take a look at the XLF, what do we know out here? Nice day today. Nice candle session. Chris is asking because of the earnings releases of JP Morgan, Citibank, Wells Fargo, PNC, and so forth out here. Could just be more of a counter trend move that we're seeing out here inside of XLF. You wanted to look at which one here? WFC. Wells, is that the Wells Fargo WFC? I think so. Now this looks more positive out here. This looks, if you were to ask me, would I rather put $1 in XLF or WFC? I would put it in WFC. You've got a rising price oscillator above 0, and so therefore that looks a little bit better to me, Chris. So good to hear from you. Thanks for writing in. Sorry to be short, just wanted to cover this as well. There were a number of questions that came in all at the same time, and Michael had a hard-boiled egg for lunch out there. That's what I had for breakfast. But Ivy wants to take a look at MWA, and Ivy is looking at the 50-day moving average and so forth. I don't have that on my screen or chart, Ivy, so I'm not going to. I'll let you be the master of the 50-day and 25-day moving average out there. Your question is, so how does it look to me and my Stevie red/green line? Looks pretty good. There's resistance though out here in this ETF. If that's what it is, you can see out here. Here's where you can see where the bearish engulfing candles are. So you know that sellers are not really far away. In fact, they may have been really right at the top of today's tick out here. See this little green dash line out here, Ivy? That starts at the high of the trading session from June 13th, which began a top to mark setup countdown, number 9. And in essence, that has acted as resistance. You've got that resistance, a couple of bearish engulfing candles out here. With regard to volume out here, let me see real quickly. MWA on a daily basis as it was moving up there. Today's volume, 135,000 shares, going into 730. Yeah, so probably not going to break out. Got a lot of resistance out here. Hey, folks, thanks so much for tuning in. Stay tuned. Your favorite polar bear, my favorite polar bear, the world's favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you tomorrow. No, I won't. I won't be back with you tomorrow. My apology for that. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.